at Tigris Financial Partners. Thank you for being here. So people were spooked, right? Friday, we were saying the Nasdaq's in correction territory over 3 days. We saw a big sell-off on the S&P, Nasdaq, and Russell, for example, but today bouncing back some. What's going on here?
Well, it looks like there's just a lot of turbulence. First, you have this unwinding of this yen carry trade when the Bank of Japan raised rates last week, and which could affect almost, they're talking about $20 trillion in outstanding debt exposure. And, when they borrow the yen to carry other assets, they're buying stocks, they're buying commodities, and that's why you saw the sell-off in stocks, you saw the sell-off in commodities. Even oil went down just as Israel braces for a potential attack from Iran. And you would have thought that that would have driven oil higher. But the unwinding of this yen carry trade has had a greater effect on it. It's good to see the market bouncing back strongly. It shows somewhat of the resiliency that I believe exists and the buy the dip reaction to any sell-off that I think will continue to provide support for the market. So I think, sometimes you hit some turbulence, you just got to buckle up and hold on and ride it through and use the pullbacks as opportunities to buy stocks. So we've had a big pullback in NVIDIA, and that bounced from its low yesterday. It's up more today. In Microsoft, in Meta platforms, and a lot of great stocks. So the sell-offs have shown to be buying opportunities, and I believe that they will be buying opportunities with the buy the dip reaction that will provide some support to the market. And there's still, close to $6 trillion in sideline cash that, wants to get in on this rally. And, we have geopolitical issues that are going on. We have what will be just a crazy election as it lines up for the match now with Harris picking Minnesota Governor Walz as her running mate. Interesting combination between Harris and Walz and Trump and Vance, and totally opposite ends of the political spectrum, views, outlooks for the economy, for a lot of different things. So I think there's going to be more volatility between the geopolitical incidents that, could potentially happen and the election, as both parties kind of outline their views and what they would like to do for the economy. So I think we'll have some more volatility, but I still think we end the year strong, and I would look at these pullbacks as a buying opportunity.
So it's interesting because you talk about buying the dips, right? And if you'd done that during March of 2020, right, you were so happy, people were so nervous then. But if they were buying at that time, they did incredibly well. And for example, NVIDIA was under $100 in the last, yesterday and such. And, now we just saw a $120 price target and so on and so forth. So the other thing is about the yen carry trade, because this is the difference part. And I know people were buying yen cheap. That was the cheap part of it, and then moving into high yield assets like tech, like whatever. But is that done? Is the worst of it past? Because as you noted, there's still outstanding debt and exposure. And, could tech be plagued by this yen carry trade holdover or, for the next 6 months?
There'll still be some more. I mean, that was probably the first tranche, the panic tranche, if you will. And, nobody makes money panicking unless you are, have the fortitude to buy during the panic. But, markets, they correct excesses. That's what a correction does. And I think that will have to continue to correct. The other thing that hit the market was the surprise spike in the unemployment, or increase in the unemployment rate last Friday. The job data was weaker than expected. One of the bullish narratives has been the incredibly strong U.S. labor market. And there's one thing that really drives the economy. It's jobs, jobs, jobs. So that was also a reason to pause. And now with the rapid move up in the unemployment rate from just 3.7 to 3.5 to now 4.3 in about a little less than a year, with the most recent increase coming in the past few months. Now everybody thinks that Powell is behind the curve. He should have cut in July, but he wasn't going to because Powell has said many times, you will be more than, I will give you more than enough indication before I do anything. And so he still hasn't given the
Right.
indication the market's looking for. However, the
Yeah.
yield curve has come down a lot. It has started to revert. But we've had an inverted yield curve for over 2 years, which is supposed to indicate a recession, yet we haven't. We've had an incredibly strong economy. So the short end, for the first time recently, the 5 year is now below the 10 year and 30 year. The 2 year came below the 10 and 30 year briefly. So that's starting to normalize. But the Fed really needs to bring rates to normalize everything to, I say that somewhere between 2.5 to 3.5, let's say 3%. And they're not going to do that until inflation hits their
Right.
target. They'll start to cut rates as it's moving toward their target. And now they need to, probably speed things up. There's no meeting in October. I'm sorry, there's no meeting this month in August. And so the next meeting would be in September. I believe they'll cut it at least a quarter point. Now there's a big probability they'll cut it a half. There's also no meeting out. So then it goes into
Okay.
November.
Yeah, yeah. You mentioned the geopolitical turmoil. You mentioned the elections, and those certainly are wild cards, and what the Fed may or may not do. Another good point. As well as some of the other things that you've talked about while you've been on air with us. You've talked about the cruise lines. You've talked about some of the EVs, Apple, Disney. Are there standouts in your mind? Do you have buy ratings on some of these? I mean, these are some names that you did love over time. Can you give us some
I
updates
still
on some
love
of the names you've
NVIDIA.
mentioned here?
I still love NVIDIA. NVIDIA is a buy today. It was a screaming buy yesterday, and luckily that turned out. If you bought yesterday, it turned out to be the case. I think it hit as low as $90 yesterday, and now it's 107. So the same thing. I believe this AI theme is a powerful theme, but it will take many years to play out. Just like the internet, the theme of the internet was in the late 90s. It was part of a bubble, but there was a powerful underlying theme that took many, many years to play out. And now everything is integrated on the internet. And I think AI will be implemented by businesses in many different ways. So again, it's the capital investment that companies will make in bringing some type of AI within their digital platform, whether it's for customer response, curated calendars, marketing initiatives to find better customers or customers that are more apt to buy your product. So AI is going to be a part of everything, and then that will benefit the companies that provide the services, such as the cloud service providers, the enterprise software cloud served by Apple, by Google, and Microsoft and Amazon AWS, and then the enterprise software companies like Oracle and MongoDB and Monday.com, to name a few. And the company that's powering it all for everybody is NVIDIA. And
Good to
also,
see you,
I think,
Ivan Feinseth. Yeah, go ahead.
so as you saw, AMD reported strong results for strong demand due to the data center demand for their processors. I think NVIDIA will see that same pattern when they report at the end of the month.